I have found what I think is the most important chart that you need to be looking at in the stock market right now. I am Dr. Stock, Doctor of Education, and I'm pressed for time, so insert dad joke here. All right, we're going to pull up the charts for SPY, QQQ. I also have the 10-year Treasury yield to show you in there, and then I want to do some updates on Bitcoin and then a few other stocks that I've been tracking. But before we get to that, I want to talk about some catalysts that we have coming up, because on Thursday of this week, we have the second estimate for GDP. I think this is going to be one big catalyst for us coming up that day, and we want to be watching for that to see what we come in for consensus and forecast, to see what that estimate comes in at. Last time it was 1.6. We're going to see if we come in around that, or if that gets revised downward, which could be downward pressure on the market, or if it gets revised up, which could be upward pressure for the market. That's 8:30 a.m. on Thursday. Friday, core PCE numbers. So what we get for personal income and outlays coming out, we want to be watching for that too. Soft numbers coming out here could be massively bullish for the markets. If we come in at consensus, that can still be upward pressure for the markets. And if we come in above consensus and forecast, we start to see some hot numbers still pumping through there, that could be something that would be significant downward pressure on the markets, especially from where we stand right now. And that actually takes me over to the charts that I want to look at, the ones that I have to share with you. So let me put that down, and I'll explain what you're seeing here. What we're looking at is SPY, which tracks the S&P 500. And you can see these three trend lines. The bottom one and the middle one are most definitely confirmed, as we have at least 3 touches on them to be trend lines. It'd be nice to see one more touch along this top trend line to really confirm it. And should we get that other touch, it looks like we're shaping up for a rising wedge pattern from the top and the bottom trend lines here. So if we bounce off of this and start to sell down, we want to look for where that support comes in. So where do we see these come in so far? The pandemic, when that hit, and the bottom of the market in 2022, and then we came down to it again during that sell-off that we had down to October. So things were actually pretty messy looking at those points in time to really draw us down that much. So I think that we'd also need that messiness to come in here as well. Something like the idea of the resurgence of inflation, something about the Fed considering further tightening, like we heard from Neel Kashkari yesterday, said that it's not necessarily off the table, rattling the markets a little bit in the pre-market hours this morning. Now, what you might miss here is along the bottom, this trend line that we have. This is the monthly chart that we're looking at, by the way. So every candle on here is 1 month, and going all the way back to January of 2018 until now, we currently have some massive, and I don't want to understate this, this is that part that I was talking about. We have massive bearish divergence taking place. So between the rising wedge pattern that we have, the rising prices that we have in the S&P, and the fact that we're selling off down this way, if we fail to break over this trend line to go back into that overbought territory, and instead we keep on selling down and losing momentum on this, if this thing should flip to bearish, we could have a massive correction on our hands. And so that is something that we want to absolutely be watching for, because people are talking about recession, people are talking about massive market correction. And while I don't know when we see that, I don't know if we see that, I think that this is the chart that can absolutely tell you what we could see coming up ahead for us. I think that this is the best thing. The closest thing that you're going to get to a crystal ball is the monthly chart with what's going on with the S&P 500. So if you don't have that currently on your watch list, if you don't have these technicals drawn out from the monthly chart and tracking the RSI on that monthly chart as well, in tracking what's happening with that bearish divergence, I think that you're setting yourself up for a mistake. I think that this is something that we either need to break up above this top trend line, or we at least need to stay in here. Now, mind you, being a monthly chart, we don't really meet to a point of confluence on here until 2027. We could be going up for a while. We could be going up for years from where we're at right now, generally speaking, before we would actually see even a breakout from this sort of trend. So don't think of, oh, the sky is falling and the market's going to crash and all that kind of stuff. I don't think that that's what it suggests. I do think that should we come out of this bottom trend line here, that could spell some messy times are ahead for us. But like I said, we have years long that we could be traveling in this before anything happens. So you don't necessarily need to rush to it, but it is something that you should draw out for yourself and that you should be monitoring. It's one that I absolutely will keep around. So moving over to the Qs, we can see a nice little engulfing candle happening here on the monthly chart, which we actually had on the S&P as well. So this is tracking the NASDAQ 100. If we drop this down to the daily chart, now mind you, we don't get the same bearish divergence with QQQ as we saw with the S&P. So that says something for the Qs, especially in AI, had a lot to do with helping that out. The AI boom that we saw hitting last year in 2023 and continuing through 2024. I think that's keeping some more of the strength there that we didn't necessarily see with more of a bank-heavy areas such as what we have with the S&P 500. So this is something I think we should be watching. If you heard my daughter in the background, you can say hello to her. She'll be a year old coming up June 19th. And we're very excited about it, and we're cranking out those birthday plans. You better believe it. So something else that you should be watching is what we have here for the 10-year Treasury yield. And so for this one, US 10Y is the ticker that I'm using here on TradingView. And for this one, you can see we came off this bottom trend line, rates are going up. And this is something that we actually had a spike yesterday around the time that Kashkari made his remarks about, possibly staying where we're at, or even considering those further rate hiking from here that is not necessarily off the table should inflation start to show that it's actually on its way back up rather than it's on its way back down. And that's why I think that the PCE is such a catalyst for us. So this is actually a bearish pattern that we have here, that what can happen off this sell-off here is that we rise for a while and then we break down through. So if I were to draw on this with a brush, we could possibly come up this way, which if we saw that double peak come in, you can bet that the market is going to probably get in pretty rough shape if we come back around that 5% mark like we had back over here. But I think that could also very much signal that double top on this, and that we could come back down this way, that we might start to see that flight to safety come in and start to see some rampant buying of 10-year treasuries. So that's something. I mean, there's way too many things that can change between now and then. We don't have to come to the top of this thing. We can actually turn around from where we're at right now, and we can just drop down this way, especially if the PCE numbers come in favorably. That's something I think could actually take these 10-year treasury yields and start pushing them back the other way. So moving over there to Bitcoin. Bitcoin falling in strength, at least for its momentum right now. And so we want to watch and see where we end up with this, that we actually do have a bit of a minor trend line happening right about here, that we have the rising bottom here, but then we also have the narrowing across the top. So more recently, this would be the part that we're looking at right now, a bit of a consolidation pattern, and you can see the volumes tapering off on this one. And so we're going to have to watch and see where we break out for that, for those trend lines, to see the near-term direction for Bitcoin. And we did not go back and set a new all-time high for this. We came close to it, but we got rejected 1, 2, 3 times. So now this is a trend line to beat. And so we want to keep an eye on that trend line and watch what's happening. There's a better trend line, by the way, that you can actually draw right here that might tell us where we actually see you can actually cheat it up this way a little bit, or if we sell down, I think that it would be even better down here. That would be more telling for where we need to bounce on this thing and find that support. And should we come up and retest resistance, we want to be looking for a push through that, and a full candle close up above that could send us up to those all-time highs. So moving over to Enphase. Enphase having a rough time this morning with the spike in those treasury yields, with the talk of staying higher for longer. Not necessarily great for solar stocks. Enphase has been on quite a tear. We took advantage of this with some options plays and some dollar cost averaging, well ahead in the green territory over in the Discord. That link for the Patreon, which you can find that Discord in, is down in the description, by the way. So go ahead and check out my buys and sells over there. So Enphase, we're still up above the 200-day, the 50-day, and guys, I've been talking about this for a while, that golden cross moment. Let me take down the EMAs so we can see it more clearly. We are so darn close to getting that 50 crossing over the 200, and I think that we could actually see sometime soon we can see that golden cross happen, and that we continue up to that 138, 150 range, unless the overall market really starts to sell and kind of pulls the rug out from under us. We're going to have to watch for that. But I think that potential for a significant upside, even from here, that we could see at least 10%, maybe even 20% on top of where we're at right now, to take us up to those values. So keep an eye on Enphase. Worked out so far. I think it can continue working. It's really going to take some good GDP and PCE numbers to really help us out with that upward pressure in the markets, and also a depression of the US 10-year treasury yield, and then also a weakened dollar could also be a little bit of more help as well. So over to Tesla, still sort of making up its mind as to what direction it wants to go, still up above the 50-day on this. And so I said the weekly chart is what we want to be watching for signals for which way we're going to go on this. Sort of having a pre-market, sort of like Enphase is, and that's to be expected. And we have deliveries in China. We'll be hearing about that probably within the next week. And then July 2nd is that major catalyst to hear about quarterly deliveries for Tesla. And a few weeks after that, probably about 3 weeks after that, is when we're going to have their next earnings. So those deliveries are going to be the most near-term catalyst we're likely going to get for Tesla. So we'll be watching for that. And I said the weekly chart's the important thing to watch. Yesterday, kind of curling down away as per the RSI from that 50. We want to cross that 50 in order to see further price action to the upside, further bullish behavior from Tesla. And right now, we just have a mixed bag, sort of in no man's land for what we're getting from Tesla for its stock price as for the moment. And then finally, an update on NVIDIA. NVIDIA, where's the top of this thing? Honestly, 1200, 1250, we could potentially see that. And we've had a lot of up, maybe another 2 days or so of up. And I got to say, if by the end of this week, we're still moving upward on NVIDIA, I think that we could see some profit taking going into the weekend with some people wanting to capitalize on some of this upside that they have and maybe rebalancing or reducing some exposure to what they have for NVIDIA. And I think that there could likely be some further opportunities down the road where after that 10-to-1 stock split, which June the 7th is a Friday, I believe is the date that they do the split. I don't know that it becomes active until the 10th, which is a Monday, for trading at that 10-to-1 price adjusted level. So we're going to have to watch for that one. I do think that we have on a split adjusted basis, 125 to 150 for prices. So that's 1250. So $1,250 to $1,500 on an unadjusted basis, I think could be within the next 12 months from NVIDIA stock. So that could allow for some volatility in between, but post-split, I think that we could absolutely see those sort of prices come to fruition. And if we see it down in two-digit territory, especially strongly down in two-digit territory over that next 12 months, I think that could set up significant buying opportunities that even though there still is some decent upside to be had, now, mind you, you might see the Fibonacci's on here, which say that possibly up to 1343. I don't think that we get that anytime soon. That I think could be maybe down the road, maybe the next 24 to 36 months if the strength holds out, if the demand holds out, if the margins hold out. There's a lot of if. Near term, though, next 12 months, I think we got 1,500. So after the split, $150 somewhere in the cards in there, assuming that we continue to see the strength for AI demand hold out for us. If the market should sell strongly during that time, it's going to drop the floor out, and so it's going to make it harder for NVIDIA to reach higher. But that could also be something as the market returns to strength after something like that, that it also lifts up the floor, and that rising tide, incoming tide, or whatever, raises all ships. I never get that saying right. That could be something that sets up significant opportunities for us. So, guys, that's the update that I have for you. If you want to see my buys and sells, see how I'm playing this market, talk to me and my other members that I have in my community. You can do so by using the link down in the description for the Patreon. Click that, sign up, head over to the Discord. That's where I post my buys and sells and where I talk with everyone over there. And then also down in the description, if you want to learn to do technical analysis like I do, you can do so using that link down in the description and get access to the technical analysis trading course and use things like the bread recipe, which is what I do with the exponential moving averages and the RSI and a few other things mixed in there, and then also some personal flavor that I have. And I also have some videos featured over there as well. You can find that link down in the description. As always, guys, I really do appreciate your time. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.